Well, okay, folks, I'll tell you what I'll do while she is on break there. I'm willing to take a few questions for those who are here still waiting until we formally begin. I won't be able to answer questions about the content. That's what you're here to find out. But I'm just curious, how many of you folks have actually seen a presentation I may have done in the past elsewhere? Just out of curiosity, type a Y if you have. Okay, some of you have. Well, that's nice. Well, I hope that it'll still be as valuable as the first time you got to see me. Terrific. And as Yana said, this is being recorded by TradersPub, or TradingPub rather, and I am also going to record it from my end. I'm going to provide a link for it eventually in a follow-up email. Because I have a trading and business commitment for the rest of the weekend, I won't be able to follow up until after the weekend. So I hope you folks will be patient and not lose me in the mix, because I'm hoping that what I share with you today will be really interesting and valuable to you. All right. Okay, and the presentation is scheduled at 1:30. We're going to start a few minutes early, so do stick around. Yes. And Yana's already answering questions and is being real helpful. She's been here since the very beginning. She's got a lot of stamina. It's like being on the trading floor all day long. It's very fatiguing trying to stay present. Those of you who day trade know exactly how that is. Of course, that's one of the things that if you have a great trading system, you don't have to stay there all day long. You can actually pace yourself and take breaks, because you know not all the best times of the day are every single minute. In other words, you don't have to treat it like a video game. A lot of people think day trading is like a video game. Got to be there, got to be there. If anything, that just puts you lower on the food chain. Well, we're waiting just a few more minutes here before the rest of the people come back from their break, and people who might be coming in on time just for my presentation. So we'll be getting started here. You want to be sharks and lions. I understand. Absolutely. You know, if you're going to swim with the sharks, you want to be on the same footing. Or as we say here in Texas, don't take a knife into a gunfight. Not that I'm trying to be all violent about it. But the truth is, you do need to have professional tools. Okay, that sounds like the timer, and she's letting me know that it is getting ready for me to start. So I'll let Yana actually give me the official go-ahead, and we'll start at about 1 minute, it looks like. Okay. Well, thank you very much, Yana. I appreciate that very warm and generous introduction. And a big thank you to TradingPub for this fantastic event that we have here today. There's so much valuable information. I wish when I'd started out that I could have this kind of information. It would have really shortened my learning curve. Well, let me step up to the plate and just start right off by saying what's in front of you right now, where it says that you can average the 2% to 4% daily return on your investment. That means your trading account, without ever risking more than $100 per contract traded. That's what I'm here to prove to you today, and hopefully I can satisfy you, and I'll be here to answer questions. Try to hold off on the questions for a bit until we get to the actual charts. I'm going to set the stage, and I'll probably answer a lot of those questions in the process of doing so. Yana also mentioned that this is for the futures market. As you'll hear me say later, it's actually for any market. So even though I'm going to focus on one of the indexes as a test vehicle to show you how this works, you can actually trade stocks and other things too. So let's get started. First of all, I do want you to know that I am also recording it. TradingPub is recording it. It'll be uploaded in the next day or so. Where it says here on my slide that I'm going to provide a link to my archives, actually I'm going to follow up after the weekend. As I mentioned to those who were here before we started this, I'm going to be away for a few days, and when I come back, I'll immediately follow up to all those of you who signed up here today. Now, I am scrupulous about following the law, and I want to make sure that you don't get bored. I'm not going to read, I promise, all this boilerplate. But the Federal Trade Commission and the Commodities and Futures Trading Commission does require me to tell you that we're not legally allowed to make promises about the results that you get. Everything that's said here today, me or anybody else for that matter, is technically educational in nature. So that's what we have to lay that down. And also, please don't go trading with money you can't afford to lose. Make sure that you have the discretionary funds. All right, now that we've at least satisfied that in plain English, I want to make sure that if you have to leave early, please write this down. I want you to know how to reach me, and don't try it right now. I'm in the middle of the presentation. I've unplugged my phone so you won't get through. That's area code 512-267, and like Columbus discovering a new world, you're going to discover a new world of trading. That's 1492. But I do request one thing. Instead of just picking up the phone and trying to catch me, because I might be in my trading room with my students or visitors, or I might be in the middle of a trade, you know what? The best way is to schedule some time with me by emailing me at mguess@daytradesafe.com. If you do that, I promise you what I'll do is I'll schedule time just for you. We'll take as long as you wish, and here's another promise. I'll keep my word on this. I will not pitch you, sales pressure you, twist your arm in any way whatsoever. I just want you to come away feeling that your time was well spent. And if you get a chance, please go to the daytradesafe.com website. Now, this is not one of those fancy websites like a lot of the high-price outfits have. This is a very old-school website. It's real simple, no bells or whistles. You'll find that the real meat is in my trading system and in my personal coaching. So I take that old-school approach. So when you get there, just opt in, and you'll be on the mailing list. I, again, commit not to spamming you in any way. I seldom send out emails, frankly. But I do want you to know that it'll entitle you to a free coaching consultation. Again, I'll take as long as you wish. I will help you diagnose what's not working with your trading, regardless of the instrument that you are trading, as I do have a background in performance coaching long before I became a professional trader. All right, all that out of the way, why are you here and what are you going to get today? Who is this for? Well, first and foremost, I'd like to ask you, how many of you here have ever day traded? I don't care what it is, minis, ETFs, stocks. Type a Y if you've ever day traded, and if so, tell me what you have day traded. Let me know. Give me some feedback. Okay, we're getting quite a few people. A lot of it is Forex, it's the minis and stuff like that. Stocks, yep. Okay, well, good. Even if you're not a day trader, what you're going to learn here today is, pardon the pun, scalable into overnight hold.
Yes,
Okay,
we can hear you, Michael.
what just happened? And how long have I been gone? It said I was disconnected.
You were gone. Yes, you were. You were gone from the beginning of the slide, so maybe just do the whole slide. Couple
Oh
of
my
minutes,
goodness.
3 minutes, Pete says.
Okay, and has this happened earlier today at all to anybody? Because I have,
Not necessarily.
okay, because I've got like over 200 megabits per second download speed on my connection. Okay, here's what we're going to do. And if you'll give me maybe a couple extra minutes at the end in case to make up for this. All right, I hope folks saw this. If you folks saw the end of this last slide, type a Y real quick. Okay, good. Now, this is important. I am wanting to know, I think I asked you how many of you were day traders, and I think I got a good response. If you're a swing trader, this is even for you. And because if you're looking to get the best possible position, you've got to know the cheapest place to get in, and you've got to know what the likelihood of follow-through is over a multi-day period for a swing trade. And you can find that the TradeSafe system, as you'll find out, will let you do that. Even if you're an options trader, you've got to be able to correctly assess the underlying instrument. That means you've got to know what it's likely going to do so you can choose your options play. And even if you say, look, I don't want to be a full-time day trader, I don't want to do that, I've already got a job, it'll help you provide supplemental income, especially if you are looking to provide some diversity to whatever your style is, whether you are a trend follower, counter trend, breakout, whether you like other markets other than the minis, really doesn't matter. So this is going to enable you to add additional tools in your toolbox. And let me just check in one last time to be sure you folks are hearing me. Type a Y if you're still with me. Just give me a little Y. Okay, great. And to continue, here's what I think most of us would agree on. We lack consistency. Sure, we don't expect to win 100% of the time. That's marketing hype. But I'll bet a lot of you out there would like to at least stop losing more than you're winning. If you want some consistency in your results, winning more than you're losing, even if it's small profits, that for me, folks, is the real holy grail of trading, not some rocket science indicator or system. And stay tuned. You're going to find out how to achieve that. So whatever you're doing, I think what you're going to come away with is going to be applicable. And I'm able to say this because, well, first of all, again, you already know my name and you know about TradeSafe. Well, I've been professionally day trading for more than a couple of decades. I've seen a lot of stuff. I'm battle hardened, if you will. And I've been a professional trading coach and mentor for over 13 years, and I've graduated more than a couple of thousand students. I've created and back-tested many, many trading systems, and the one that you're going to learn about today, this isn't just for today's markets. If you want a really robust system that's not curve-fitted or over-optimized, this one's been in use for more than 15 years without any major changes whatsoever. And earlier I mentioned that I had actually been a performance coach. I've been a therapist and a coach for more than 3 decades, and I bring that to the table. I've been certified in neurolinguistic programming and some additional modalities, so I really am able to not just help you learn a system, but help you stop shooting yourself in the foot with those self-sabotaging trading behaviors. All right, now that I feel I've set the stage, what are you going to actually learn today? Okay. I'm just partly reading some of what's been posted here. All right, today, I want you to stop chasing the latest gimmick because there's a song from a long time ago, and I'm betraying my age here, but it was a song, She's Trying to Buy the Stairway to Heaven. And I don't want you to do that. So many people, they will pick the flavor of the moment. They will try to buy their way to success. That's usually the indication of a beginning trader. Hey, we were all beginners once, right? Well, I'm here to tell you that you don't get success by trying to buy your way to success. You actually have to have something more than that. And we're going to help you identify what's stopping you from consistent results in your winning. One thing you've got to stop doing is trading the same exit strategy over and over again. A one-size-fits-all just does not work. And then I'll introduce you to the TradeSafe system. What are the rules? How can you achieve the profits through the precision and consistency that it brings to the table? Because I'm a believer that if you have a real mechanical system and professional coaching in your corner to make sure you learn it well and apply it consistently, you have the best odds. All right? Okay. And I would like you to please be patient. Pardon me. Because I'm actually going to use charts. No, this is not going to be all some PowerPoint thing. We're going to go straight to the charts. You will actually see exactly, step by step, how the TradeSafe system works. There are only 4 simple steps, and I am going to have a special offer for you at the end, so stay tuned. Well, let's keep going, because I'm trying to make up for a little bit of lost time. Don't want to lose your attention. Cycles are at the root of the TradeSafe system. You heard me mention before, we all get tired of sitting on our bottoms all day long, and that's not really the hallmark of a good day trader. You don't want to be glued to the monitor. You can actually be a part-time strategic trader instead of one who is trying to treat trading as a video game. Because in video games, what happens? Oh, you're always white-knuckling the mouse. You don't want to be caught. You know, you're worried about getting killed. Well, in trading, a lot of people say, I don't want to miss the next trade, and they get all worked up. I'm telling you, you can actually relax. You can be strategic. You can see the big picture. Like that camera down below, you can pull back, get a wide-angle view, and you can anticipate what's really going to happen, and you can adapt and adjust by zooming in and out, and that's what enables you to pick the right strategy, because there is no one size fits all. This is because the markets are fractal. You can scale up or down, whether it's a daily chart or a 1-minute chart. A chart is a chart is a chart. I know it's a cliche, but it does reveal the cyclical nature of the markets. And at the heart of that are things that are called ratios. Now, in the example I'm about to give you, I'm going to be using one of the 4 indexes. It's going to be the Russell 2000. How many of you here trade either the ES, the YM, the NQ, or the TF, any of the minis? Let's get some Ys and tell me what you like to trade if you are one of those. Cool. All right. Well, here's the deal. Yep, the Russell. It doesn't matter if you trade other markets. I'm going to show you a formula for how you can go and do this yourself, because it has to do with when the market's opening bell and closing bell happens to be. Now, in today's age, we've got round-the-clock trading. We know that, and the Forex is a prime example. There is no beginning and end. But there is, at least with beginning and ending sessions, most of the volume tends to occur. For example, with the minis, Chicago pit time, 8:30 in the morning, 9:30 Eastern, 3:15 close. Between those two times, if you add up the minutes, and I'm not going to ask you to tell me what they are, I'm going to just save time and give it to you. The master number is 405 minutes, not a number that comes to mind easily. Here's what you do with that number. I want you to think of the biggest number that'll divide into it, other than itself, without any leftover, and keep looking for smaller and smaller multiples with a 3-to-1 ratio. Now, the biggest number is 135. If you make a chart with 135-minute bars, that's way too big for day trading, isn't it? It's even probably too big for swing trading, but it is an intraday number that could be applicable. If you keep stepping down 81, 27, and so on and so forth, you're getting numbers that you don't normally see in the drop-down menus on your trading platform. That's because those trading platforms have generic stuff in them. What we're going to teach you is a tuned, cycles-based way of creating your time frames, the settings for your charts. And all along, you're going to get that 3-to-1 ratio. Here are the numbers that work really, really well. If you take 3 basic charts, an entry chart for a 1-minute, a 3-minute main dominant trend, and a large time setting of 9 minutes for your largest setting trend, that's what you want, a 9, a 3, and a 1. Not all platforms can let you do that, unfortunately. That's because they're not really professional grade platforms, with all due respect. But you've got to have that 3-to-1 ratio, and you could even supplement it, frankly, with tick charts. Okay? Now, even though I can give you settings like 144, 233, those are Gann or fib numbers, and fib is fine. You just listen to a lot of you about fib. There's nothing sacred about that. The main thing is that you adjust your settings based on the volatility of the market if you're trading a tick chart. And in the TradeSafe system, we do that. We're always adapting and adjusting, and we do it consistently. Now, the goal is that if a time frame is turning, let's say a 9 minutes putting in a swing high or a swing low, a resistance or a support level, all the lower time frames are turning at exactly the same tick and exactly the same second. If you've ever looked at a 1-hour chart and you wait till the close, guess what? You got a leftover bar. It's not a full 1-hour bar. That's because a 45-minute chart would have been better. So I'm showing you these settings that truthfully really work. Yes, Bob, I am saying they are not as good, especially if you're trading the minis. And you got to do this for whatever market you trade. Take this approach that I'm showing you here. A 9, a 3, and a 1 is way more precise, and you'll find that you get better results as far as trend agreement and lower risk. Stay tuned. I'll show you how and why. Now, you will have to do this on whatever other kind of markets you do trade. And you'll have to do it with what's called a top-down analysis, like the professionals do, in order to predetermine what the likelihood of your trend's follow-through is going to be. So you would do a top-down. You'd start with a 9-minute. Is it in a trend, yes or no? And you'll see later on, I'll show you how we do our trending determination on the TradeSafe system. You then look at a 3 and you look at a 1. And what you're looking for is trend agreement, obviously. We all have heard of that if you've ever used more than one time frame to trade with. And this enables you to pre-plan your exit strategies. You do not want to get into a trade and then go, now where do I get out? I'll bet a lot of you folks are always wondering, where do I get out once you're in the trade? Well, do I get out at the next support or resistance level? Do I get out at a fib level? No disrespect to all of there. Well, I will show you that you can actually have a great sense of how to anticipate what that run is going to be. And this is what you must do every time you step away and sit down again. Do another top down. Okay? Now, if you were to take a symbolic 9-minute chart and it's in an uptrend, your dominant trend, the 3 minutes in a downtrend, your surgical low risk entry, a 1 minute in an uptrend, they're not trending together. You have a mix mash. What you really want is your surgical low risk 1 minute chart or even a tick chart to be trending it with at least the next higher time frame, the 3. Best would be if they all agreed. Here's a little rhyme I teach my students. It's a mnemonic. It goes like this. The 1 and the 3 need to agree. Best is if all 3 agree, like that. And once you are doing that, here's how you assess your potential trade setup. If all 3 are trending together, the 9, the 3, and the 1, and or a tick chart, this is going to give you the strongest moves with the greatest follow-through, right? This means that you can load the boat and, to mix my metaphors, swing for the fences. On the other hand, if only the bottom 2 time frames are trending together, that would be the 1 minute and or tick chart, and the 3 minute, you're going to get a brief, weaker move, but you can still exploit it. You may not want to try to go for all of it. You may want to just get a little bite out of the market. If you've ever wondered, gosh, do I stay in this trade or not, this is going to help you know whether it's time to get out or stay put, because it's providing you with a roadmap that lets you know exactly where and when things are going to occur. So does this work on just the minis? I already told you it sure works on the minis, even the pit traded contracts. But it doesn't even need to be here in the US. It can be the FTSE in the UK. It can be the German DAX. It could be, if you traded the local minis. I prefer the Russell or the NAS because they're the trendiest of the bunch. And this is going to be heresy, I know. But I've been trading the S&P since '93, straight to the pit when it was $500 a point. And I've gone through all of its history, including '97 when the first ES contract was released. In my personal professional opinion, the ES, if you're a trend following trader anyway, and I believe that's the safest and strongest and most reliable way to trade, I believe that the ES has been corrupted. Ooh, he went and said it. Yeah, I did. Because high frequency program trading, all that sort of stuff, the institutions have moved into the ES because of its very liquidity. We love liquidity, but you know what? Too much of a good thing attracted the bad guys. If you want to be a retail trader, and I mean retail, you're trading anything less than a few dozen contracts, then you really should stay in a market where the big guys can't come. And the Russell is a market where they don't play at all. So consider that. And I just want to make sure you're hearing what I'm saying. Did you catch that remark? Type a Y. Type a Y if you did. Uh-oh, there we go. All right, great, great. All right, I'm not trying to put you to sleep, but you know, I'm not seeing my image as far as what I'm projecting on my projector here, and that's why I'm worried that I'm not sure if I'm getting through at times. And I'll keep answering questions, but I'm going to try to answer some of them at the very end here. To continue with which markets to trade, I still think the Russell is your best compromise. It's the trendiest of all of the 4 indices. It's a simple, easy market to trade, 10 bucks a tick. It's got the biggest range of the day. It's over $1,000 average daily range. And today it was over 2,000. But if one of you just now typed, what about crude? Okay, I think crude is a pretty good market to trade. It's reasonably liquid, but it's slightly manipulated by the institutions. But you know what's a better choice? Natural gas. Now, 10 years ago, I wouldn't have given natural gas the time of day. Now that there's adequate volume, it is an excellent trending market. It too has a $10 a tick value. So I would encourage you to consider natural gas. And that is what I personally prefer to trade as far as the energy complex goes. What about the currencies? Oh, they're always generally trendy. The yen and the euro are usually recommended. You have to be careful though. Sometimes the volume drops a little bit. What about the ETFs and the stocks? Sure you can, but let's stop and think for just a moment. Other than the fact you need a way bigger trading account just to legally start, 25,000 if you're day trading, you've got splits, you've got dividends, you've got routing issues, you've got black pools, you've got all kinds of complexities, let alone 12,000 choices every day. You will find that you have fewer restrictions, more pure form of trading, and better results in consistency. In my opinion, if you trade the futures market, your bang will go much further for the buck. That's my opinion over 2 decades of trading. Now, if you're starting out, you may go, I don't want to get around that. You get really hurt. It's true, you can get hurt anywhere, but that's if you don't know what you're doing. So like I say, don't take a knife into a gunfight. Make sure you have the right tools. So now that we know what you can trade it on, let's come back to the beginning. I made a commitment. I said that I believe you can make 2 to 4% or more on the TradeSafe system and never risk more than $100 per contract traded. And I'm going to just skip to the end right now, not with a slide. I'm looking over here at my stats just from today. And this is an encouragement, an inducement for you to stick around and watch what I'm going to show you on the charts in a few more minutes. I don't cherry pick examples. I'm going to show you exactly how the TradeSafe system did today on the Russell. I'll show you every single trade we took. I'll tell you the entry, the exit, the profit. I would say the loss, except we had 6 trades today. That's on the low side. All 6 were winners. We made on a 2-contract basis, hold on, did we make 2 or 4%? No. We made 16.8% today, and that is not really unusual. So 16%. How many of you would be happy with 2 to 4%, let alone 16? So I didn't cherry pick it. This is how we did today. So hang in there. I will show you that. All right, let's continue. If you are on a per contract basis, never risking more than $100, that algebraic symbol means or less. Why? Because I want you to know that I don't use a fixed dollar stop. Some of you always risk the same amount, 100, 200, or whatever, or maybe a percentage of your total account. I use what are called adaptive or logical stops, and this allows you to really trim the risk without choking off the trade. Now, if we're going to scale out on an exit strategy, we keep the maximum at 100. If you're going to use a TradeSafe type of scalping, it's lowered to even a $70 risk. That's how small your stops are. We really, really risk very little in the TradeSafe system, and I'm very capital preservation oriented. I'm very defensive. I think just like in the movie and the book Moneyball, rule number 1, strike out as little as possible. Rule number 2, just get on base. Well, I want you to be consistent and lose as little as possible. Quit swinging for the fences like Babe Ruth did, because he was also the strikeout king. You don't want to do that in your trading. So whether you scale out or you scalp, you are at the end of the day, at the end of the month, wanting to average about 2 to 4%. And if you trade a small $5,000 account, that works out to about $100 to $200 a day. Now, some of you may say, oh, that's not enough money. I need more. Well, remember, it's percentage. That's what levels the playing field, okay? So I want you to think in terms of, hey, if you had a much bigger account, whatever 2 to 4% of that would be. So keep that in mind. So what can you expect? Well, here's a simple formula. We'll start you small, 2 contracts, $5,000 account, 10 would be better, more is probably unnecessary. Your daily goal is 2 to 4%. We've already said that. And for every $2,500 of retained profits, you get to add another pair of contracts. You go from 2 to 4, and you go from 5,000 to 7,500 would be your next target of total profits. And then you could go from 4 to 6 and so on and so on. And you could theoretically at the end of a full year be trading massive size that's virtually infinite, and that's not possible. First of all, the market couldn't handle it. Secondly, you'd probably stress out and have a nervous breakdown. So no, you're not going to get 4,800%. That's pure hype. That's not real. What is real is that you're more likely not even to trade every single day. Because if you traded every day, 20 days or more a month, and made 200 a day, let's say, that's 4,000 a month. That's 80% return in a month. And unless you doubt me, I've done 200 and 300% real money in a month. We have doubled and tripled our accounts, but all we're shooting for is 2 to 4%. So why do I say yours is going to vary? Because in the TradeSafe system, with my coaching and the feedback and the tools I give you, you're going to calibrate. You're going to benchmark. All right, now we've gotten to the point where we can switch to the trades. So I'm going to, and this is a little unprofessional, I'm going to minimize this here and go straight to the charts. And I see that I'm somewhat running out of time here. I've got about 30 minutes on the clock, okay. I'm going to give you a brief tour of the charts. Now, first of all, like many of you, and Kim is, okay, Kim got his or her answer, okay. The question was $100 per contract with what size account? And I already mentioned 5,000. Pardon me. So, like many of you, if you're trading, we use more than one monitor. You don't have to. In fact, if I'm going to be doing this presentation today, I've got to squeeze all my charts into one monitor, so I'm showing you it can be done, even on a laptop. And what do we have here? So that you don't think there's too much overload. In the dead middle of your chart, of your screen, the middle third, that's our entry time frame. It's a 1-minute chart. The left-hand third, we've got a 9-minute and a 3-minute. The 9 minutes down below, the 3 minutes up above. And then on the right-hand third, to supplement our entry on the 1 minute, we've got a 233 tick above and a 144 tick below. All right? Okay, wow, 48 minutes is what Ed is saying. Wow. Well, I thought I started my recorder. Anyway, I'm not going to dwell on that. Let's just keep rolling. And I'm going to show you first how I do a top-down. Before I do it, there are 4 steps to a TradeSafe trade entry. This is a trend-following system, folks, in case you haven't heard it already. And in a trend following system, we must, step 1, determine is there a trend, because if you don't have a trend, you don't do anything else. You either go look at another market, fix a sandwich, or call it a day. We're going to start with our 9-minute chart here, and it's a pretty clean chart, right? All we've got is some price action, and no, this is not candlestick theory. They're just there because they're easy to see. And each of these vertical dashed lines are there in order to show you the break from the close to the open. These are day-only chart settings for the 9-minute. I filter out the overnight noise. On the other charts, we do include them. These dots right here are showing the pivots or swings, their resistance and support levels. Down below is an oscillator, a custom-tuned oscillator, and overlaid, you'll see this colored series of bands. That in the same subgraph is our master trend indicator. And it is able to determine the change of trend from up to down, down to up, or if you had consolidation, and I've marked off a little area here where we were congesting and consolidating, it knows when we have a legal breakout, as you see the color changed right there, down below. So this is a trend indicator that I've never found anything comes close to. It utilizes more than one methodology as a fail-safe in determining trend. It uses an indicator-based type approach, and it uses a pure price action and support or resistance structure approach. In plain English, it's covering the waterfront. So on this chart, we've got a downtrend. We want the minimum is the 1 and the 3 to agree. Best is if all 3 agree. Well, we're starting here with a 9-minute chart. It is in a downtrend. What about the 3-minute? Going into the open, and you can see the overnight trading down below. Here's the 8:30 Chicago pit time open. Look, the color changed, and it's showing you that we're in a downtrend. It's telling you, showing you exactly and precisely that you know. This is not some brain dead type of, hey, go take the trade, and you don't have a clue. This is a fully disclosed white box, non-curve fitted, non-over optimized system so that you can know exactly where you stand at all times and why you're getting the signals, because you're going to know all the rules. So it's in a downtrend. So we've got the 9 and the 3 are down. What about the 1 minute? That's the one we're going to take the trade on. And it is in a downtrend also after the open right here. And what we're looking for is step 2, 3, and 4. Step 2 is a retracement. That's a pullback, a brief counter trend move to this indicator right here. Or in plain English, and it's been around as long as dirt, and you're in an uptrend, you buy the dips. In a downtrend, you sell the rallies. The only difference is if you've ever tried that method before, people have always said, oh, well, this or that, and they were very vague. They weren't precise. Oh, when it turns down, that can be interpreted so many different ways. How would you like to have absolute precision with real tolerances so it's not about here or it's repeatable? Absolutely. And so you don't put all your eggs in the retracement basket, we're going to have some independent confirmation, uncorrelated by this overbought and oversold that you get down below. And last of all, to keep that reward and risk ratio intact, we are going to want to keep your risk at or below $100 if you're going to scale out. Well, in this example, we're going to scale out because why? The 1, the 3, and the 9, they're all in a downtrend together. Consequently, we are going to pre-select an exit strategy, and here it is in a hidden panel. It's called the TradeSafe Scale 100. And that means we're going to take some money off the table, about $100, and well, actually exactly $100. That first half of the position of 2 contracts, the first one will yield $100, and we've paid for the trade. There's automation in this, as you'll soon see. Once we've done that, we're going to trail a profit stop as far as the market will take us. And instead of guessing where to get out, I'm going to show you exactly how to trail a mechanical profit stop so that you'll see where and when to get out to the tick. Let's get started. I'm going to actually have this start up right now. I'm going to speed it up in the interest of time. And when it starts the retracement, I will slow it down. And Dan is asking, do I trade in the direction of daily and weekly charts? Frankly, Dan, those are way too far out of the range of intraday to be significant. You don't need to look at those. Now, we've got a very direct retracement. It has a specific angle that you're taught. It has to have a minimum number of bars. We have real specific conditions on the retracement so you don't get something sloppy and low grade. And it has to be very close to this moving average. You either must touch or have a tolerance. Well, if I pause this for a moment and show you, and I click to the right of this, look down in the data box right over here, right where it says Rule 21. When I click again, it's showing you that the part of the price bar that's retraced, that's closest to that moving average, it's 1 tick away. We are within our realm of tolerance. I'm not saying what the tolerance is. That's part of the rules and that's part of the system. But you will absolutely know if you're inside that zone of tolerance, plus or minus. And even if it overshoots, another bar goes deeper, you'll still know if you're within tolerance. So we've already fulfilled step 2. Step 3, you want to get overbought? Independent confirmation. It's not just more of the same. Hey, we are overbought. So all that's left is step 4. With 22 seconds left on this 1 minute bar, we're going to put an order in. We're going to park an order. We never, ever chase the market. We park a stop limit order so that the market price action will put us into the trade precisely. It's springing the trap. You don't chase the tiger. You let the tiger come to you. Okay? So yes, there are audio alerts, and you will need to actually give it something to key off of. You have to not put it on the bar, but to the right of the bar so that the readout has something to key off of, Matthias. And no, Bob, I'm not going to give you the settings for all of my system. Sorry about that. People, by the way, have tried to reverse engineer this system, and nobody's been able to do it. I've got over 20,000 lines of code in this. This is a really professionally engineered system. So all things being said, we're waiting for price to complete in the last few seconds on the clock, and I'm going to park an order 1 tick below the low of this bar right here at 1067.5, assuming it doesn't grow bigger, because what we want is we want to stay 1 tick under this and let price action trade through it. So I'm going to get down to the 5th second, It's 21, 20, and so on. And when it gets there, I'm going to right-click and park the order. And you'll see me do that. This is called Chart Trader, where I actually park the order right on the chart. It's much more intuitive instead of using a DOM or something like that. You heard the lady say order pending. And there's your, and now the order got triggered. Price actually hit it. The automation is taking over. We now have something called a bracket or an OCO. How many of you folks know what a bracket is or an OCO? Oh, good, good. Well, this is an OCO. One cancels other, order cancels order, so that if you hit the target down here, because we're short in the downtrend, and we're going for a $100 profit, and our stop loss order is $100 maximum. I told you the max is 100, but we're going to improve on it. I told you also that it's or less. Watch me as I reduce the risk down to one tick above the setup bar. Look at the spatial relationship between the amount risked and the profit to be made on the first contract. That is putting it much more in your favor. And you will see that these smaller stops, because they're based on being one tick away from the other end of the bar, that's a logical stop placement instead of a fixed dollar stop like it started out as. And you will, pardon me, it will always give you that kind of relationship. So here's what we're shooting for. We want to reach our target, of course, in order to make money, but I have built in an algorithm. I like to hedge my bets. I don't want to stick my neck out that far, one full $100 worth, 10 ticks on the Russell, and hope that I'm going to make it that far. The algorithm, when certain conditions are met, it's going to move my stop from where I could have had a loser to where I could enter and one more tick of profit. And that extra tick of profit is going to pay for my commission and still have me profit left over to add to my trading account. So that's my hedge. I'm hedging my bet. And let's watch and see what happens as I speed this up. And I'm going to try to catch it as it gets into the condition. It's almost there. There we go. I didn't do anything with my mouse. It was automatic. All I did was go to fast forward and then pause. The cancel and replace moved the stop from here to one tick of profit. We're in a can't lose situation now, folks. So already we have eliminated the possibility of a loser. If it didn't make it the rest of the way to the target and turned around and broke even, you still have a tick to pay the commission and have extra lunch money to put in your account at $10 a tick for the 2 contracts. Now, let's keep going a little bit further and let it scale out. And it has scaled out. You've got $100 off the table. Closed profits that can't take it away from you. You've actually already got 2% of your daily ROI in your pocket. So you could quit trading right now if you wanted to, just on that alone. But we're going to try to trail a profit stop, and we're going to use this highly modified mechanical trailing stop indicator. But we have to wait until it reaches past where our stop is sitting physically. Every time a bar is finished, a plot point starts. So when that one finished, then there's a plot point. But what we're going to do is we're going to give it one tick of breathing room. That's because there is a tendency in this particular indicator to touch this oftentimes and then keep going. So what we will do, and I'm not really going to try to keep up with it every single time, just know that in the real world of trading, if we were on normal speed, we're on high speed, we're on 20 times normal speed right now, that a lot of you probably would have exited. See how it's chopping here and even coming up? A lot of you would have bailed out because you probably are trading your beliefs or your emotions instead of a mechanical stop, which would be one tick away from that plot point up here. Now the market has more legs on it. And those who jumped out and you were happy with your profit, up until then you would have been, yeah, great. But now that it's got more distance to it, you're going, oh, I left money on the table. Woulda, coulda, shoulda. I wished I had stayed in the trade. Well, with it back tested, and that's over 20,000 trades, folks. Over 15, 16 years, 20,000 trades. This system will keep you in much longer than guessing ever will, or even saying, oh, I'll get out at a support or resistance level. Yeah, sometimes that works pretty well, but I would much rather not have to stress over it. I would much rather use a mechanical, rules-based, automated system that has been thoroughly back tested. So we're waiting until we're getting close enough for it to hit, and then I'll actually move it in place the final time. But normally, you got a full minute each time to advance it. And it's a very satisfying feeling. Every time you've moved it, you knew you've added anywhere from 1 to 3 or more ticks worth of profit based on however many contracts are still in this particular trade. I'm getting ready to pause it here because we're getting closer to stopping out. Now, if you touch one of those dots, remember, we're not knocked out of the trade. We have backed off 1 tick. And again, I haven't trailed the stop necessarily every single bar. I would have done it in the real world. But in the interest of time, getting us out here in an hour or less, I'm just going to stay on high speed until we finish this sample trade here. This is so you understand how the system works, see how it works. And I'll answer all your questions before I go to today's trades because I want to make sure everybody knows what you're looking at. And notice how we're already congesting right here. A lot of people would have bailed. You would have said, oh, it's stalled. Let's get out and get what we can. And yet, there it goes for more. But what we're doing here is we're going to wait until it actually hits the mechanical trailing stop. And so we're going to have to wait for it to go a little bit further. And for those of you who experience getting real anxious or antsy about, oh, I don't know if I can stay in the trade because that's a psychological issue. It's a discipline issue, and that's my background. I can help you with that. That's why I think just getting a system alone is only part of the equation. You really need to have someone in your corner and powerful tools that I give you that can help stop that self-sabotaging behavior. So here I am. I'm still talking, and this trade is still going. And this is not terribly unusual. We had a nearly $800 winner last Friday. Okay, we're almost there. We're going to slow down to normal. Just about ready. And I'm going to have to move the stop back to 1 tick above that dot, the plot point. 1 tick above it is right here at 0.9. There we are. Let's let it take us out of the trade. Stop filled, said the lady. I want you to write this down. Even if you don't trade futures, this is simple second grade math. I want you to figure out how much you would have made on this trade. We would have sold 2 contracts, and we would have entered at 1067.5. You would have exited the second contract at 1064.9. That's 1 tick above where the dot is. Subtract that smaller number from the bigger number, and you're going to get a whole number and some decimal places. For every decimal point, that's a $10 tick value. Multiply it out, convert it to dollars, and then add what we made when we scaled out way back here at $100. So $100 plus that number, what do you think you made? Oh, Diane, you're so quick. You are very good, and you got it right. So the rest of you, you can cheat if you want and see what Diane typed. Everybody sees what everybody's typing. Yes, indeed, I'll just show you the profit on this trade was 360. Well, that's already over 6% on this trade. We're just shooting for 2 to 4%, aren't we, folks? So now I'm going to back up and take questions, but I have one for you before I answer your questions, and it's simply this. Would you be interested in having the ability to adapt and adjust? If it's a weak trend, just scalp, grab a little quick $100. And if it is got a lot of horsepower built in, a lot of trend agreement, then you would swing for the fences. This, of course, is an example. You don't always get these kinds of conditions. Well, today actually we did at least once or twice, and I'll show you those trades. So of course you want to have this kind of flexibility and most of all consistency. Even if it was only $100 a day, I'll bet you if you knew you made it more often than you lost it, that's what you would want, and you'd want it straightforward, precise, and simple. So let me scroll back a little bit and see what some of these other questions were. And I'm scrolling down. And yes, one of the questions that was asked is, does each minute mean each candle is 9 minutes? Well, on the chart that I entered the trade on, this is a 1 minute chart. If you look, like I'm just putting it on a random bar, look straight down below, it says the time is 9:12. The very next bar is 9:13. This is a 1 minute chart. We started with a 9 minute to determine the trend for the big picture, intraday for the whole day or half day. Then we checked on the 3-minute. That's the dominant trend. You got to at least have that in this. And then we checked this one. So I hope that helped answer your question. All right, the next one is, well, Kumar, why 9 minutes and not 10? Kumar, if you were here at near the beginning, I answered the question that we use cycles, and we had the master number of 405 minutes, the difference from the open to the close, and we find integers that divide into that retain the 3-to-1 ratio. These are much, much more precise than those nice generic numbers, 10, 15, 5, 30, 60. Those things really are generic. Don't trade a generic thing. Trade something that's tailored for the market you trade. And I already answered Dan's question about trading in the direction of daily or weekly. Actually, that's more like a fish in water. It doesn't even know there's water. It's so far above it has negligible effects. And the pink line is a proprietary indicator that we have to retrace to. And Diane is saying, do I run a live trading room and log our trades? We absolutely do. And Bob already asked if he wanted the setting on it, and I already answered him. And let's see. And she's repeating that question about the trading room, and I'm still scrolling. And Diane is saying that she thinks that I have to have a license to do what I'm doing in Ninja. I don't know what you mean by having a license. My students get to use NinjaTrader for free with all its features, unencumbered, unlocked, everything you see here for total free. And that includes a professional grade data feed. You'll see about that later. I make those arrangements. Now, it's when you trade a live account, sure, you're going to pay the usual quarterly fee to NinjaTrader unless you buy a forever license. All right, and let's see. And the trailing stop, Kumar wants to know, is it manual? Well, it's mechanical. If you mean is the software going to move the stop, no software is able to tie a moving trailing stop to an indicator that I'm aware of. And how long have I live traded this versus back test? How about 16 years, Diane? And is that the standard stop in reverse indicator? Not at all. No. And let's see. And Diane, you said you had 3 pending questions. I think I've answered them by now. And let's see. And Diane got the correct answer for the profit. And what platform is this running on? It is NinjaTrader. If you know the rules and you have a professional grade platform, for example, TradeStation, eSignal, Trade Navigator, and so on, those are all professional grade platforms. You will be able to replicate most, if not all, of this. Admittedly, I've got proprietary stuff on here on NinjaTrader that you would get that automates nearly everything you see. But the rules that let you create that on other platforms are fully disclosed. Now, I can't speak for things like Thinkorswim and so on. They may not have some of the capabilities that make this work so smoothly and easily. You may have to do quite a bit of it manually. All right, still scrolling down, looking at other questions. And Dan is saying if he could make $100 a day, he'd be the happiest man in the world. Been there, done that, Dan. I was the poster boy for losing, believe me. And Diane is saying with no losing days, right day? I'm not sure what you mean. Today we didn't have any losses. Of course, the cost of doing business as a day trader is you will have losing days. And Dan wants to know about Renko bars. Unfortunately, that is not compatible with a cycles-based approach, and it doesn't give you the precision that I'm giving you. And a little still scrolling. Okay. Well, Diane, trust me, when I say I've made arrangements, you will get all of this absolutely for free. You will not have to pay for anything while you sim trade and learn my system in my course. And for the euro-dollar cross, Rich, that's Forex, and it has no starting and stopping time. I can talk to you offline about that. And, oh yes, for live trading, well, of course. And then that if you already know NinjaTrader, they bill $60 a month, billed quarterly. Let's see, is displayed for, and Pete wants to know about the high frequency traders. Is my stop displayed? First of all, Pete, there ain't none. There are no high frequency traders in this market whatsoever. And I would never, ever not show my stop or trade without a stop. What do you do if you lose your internet connection? You are SOL, to be crude. And let's see. Pardon me. Let's see. If I bought 2 contracts, that's 200. I'm not sure I'm following what you're saying. And that is correct. Okay, got it, got it. And no, Bruce, I do not trade Forex. I did it for quite a while, and I personally wouldn't touch Forex with a 10-foot pole. Yeah, well, when you say licensed, Diane, you can lease it indefinitely, you know, month to month to month to month. You don't have to buy it for $1,000. Okay? All right. I'll tell you what, though, I want to make sure that you folks have time to see today's trades, and I can wrap things up. If Yana is there, can you tell me how much time I have left, please? Because my alert went off. I have 24 minutes before I'm out of time. Really? That much? Okay. Wow. Cool. All right. Well, then let's go ahead and do this. I'm going to switch from a replay mode here, and I'm going to go to today with a live feed. Give me a few moments to disconnect from the replay, and we will go to the live feed. And while it's doing that, is NinjaTrader a must? I would highly recommend it, though I have people who use other platforms. I already addressed that earlier. I do provide a white paper with all the settings, everything you need, so if you want to recreate these things for other platforms, you can. Give me a moment to bring it up to today's contract. And as soon as it's present, here's what we're going to do. I'm not going to do the full top down in the interest of time, but I am going to show you on the 1 minute, 233, and 144 tick charts where the trades were. That's the 1 minute. Let me bring up the 230. I don't know if this is a 233 or not. Oh, it's not. That's natural gas. My labels are missing here. I will try to, I just did that one. Tell you what, it's easier if I just bring them up this way. And now the 1 minute, and then the 233, I hope. There it goes. All right. Now, I'm going to begin with a 144 tick chart because, well, I'm trying to. It's just my labels are missing. That's Windows for you, you know. Here it is, right there. Now, I'm going to go back to the beginning of the day. And this is today. Like I said, I'm not cherry picking. I just said I'm going to show you what today is. I always go into these presentations, I take my lumps. If it's a loser, it's a loser. On our first trade of the day, it was at 8:42. That's right here. And I'm going to slide it over so you can see exactly how it was setting up. And let's think of those 4 steps to an entry. You've got to have trend agreement. The 9, the 3, and the 1. If they're all trending up in this example, that would be ideal. Well, they were. The 1 minute and the 3 and the 9 were all trending up at this point in time. Therefore, I would have used a scale 100. And that means I would have exited, and I'm going to zoom in a lot so you can see this better. I would have exited after $100. Now this bar, if I click on it, look in the data box, and you will see the proprietary readouts. It's showing you that the distance from the indicator, it's where it says Rule 21, is only 1 tick away. That's within our zone of tolerance, folks. The retracement started back here as a very sloppy, very poor quality retracement, I must say, based on our rules. But it was legal. And it had at least the minimum number of bars. So steps 1 and 2 are fulfilled. Step 3, was it oversold? Yeah. Step 4, what's the risk? Look in that same data box in the lower left corner of your screen, and it tells us that the risk is $70 per contract. It is smart enough to know that you're trading a particular market, in this case the Russell. It knows the tick value, and it knows to calculate it in a dollar basis, or whatever your currency is, per tick. It knows per contract and per tick what you're trading. So all that's done for you. And I would enter one tick above this bar's high with a stop limit order. What's the high of the bar? Look in the data box. 1106.9. So 1107 right here is where I would have entered. I'm just going to mark it off with a visual aid. And $100 at $10 a tick is at 1107. 1108 is up here. Right there. There's your target. So let's just scroll forward and see how we did. Boom! We already, in 2 minutes, 2.5 maybe minutes, we already made $100. Our stop, which would have been down here, would have been moved to where we started, break even, and I'm just going to remove this because we've hit our target, the initial target. And our stop wouldn't be at break even, it would be at 1107.1, one tick of profit. Let me pause and take questions. And let's see. Hold on here. I need to make sure that I've not missed any questions. All right. The last question was NinjaTrader a must? And Jay responds as one of you fellow attendees that he thinks it's great. He's been using it for years. Folks, I actually started out on TradeStation almost 20 some years ago, before it was even called TradeStation. It was called System Writer. I was a beta tester, and I've been through almost every major platform. All things equal, there's no such thing as a perfect platform, but I like this one a lot. And it really works very well for a beginning trader and an experienced trader. Next question. Let's see. Yes, Kumar. Again, I don't know if you missed some of the presentation. We have a 9, a 3, and a 1 minute as our principal time frames, but we supplement our entries not just on a 1 minute chart. We also use tick-based charts with settings of 144 or 233. This is a 144 tick chart. And let's see what else. Right. Still scrolling down, down. All right. And Dan wants to know, will I help him grow a $25,000 account to $100,000 in 1 year? Well, I give you a money management formula that if you follow it and you use the feedback, then you'll always know exactly how well you're doing, because I take the approach that trading should be a business. In fact, you have to complete a business plan to take my course. Oh, yeah. I don't want you to be a dilettante or treat it like a hobby. I want you to think of it as a business, and you happen to be a trader. So you'll be able to know how well you're doing, Dan, and you'll be able to anticipate what kind of results you're getting. And let's see. I already said this is a 144 tick chart. And Pete wants to know, after I'm in the trade, do I look at the other charts, the 3 or the 9? No, I don't. So we're monitoring this trade. We've scaled out. We've made $100, closed profits. Our stop's at break even. At the worst, if it didn't go any further and we couldn't trail a stop and hit that where our stop would be right here, we'd pick up one tick, $10. We'd have made $110. But let's see what we did get on this trade. It's the first trade of the morning, and it's going forward. Look, we're trailing our mechanical stop. Did we hit it there? Remember, we back off one tick. It's not at 1108.2, it's 0.1. So maybe we did get knocked out at that 1108.1. And if you subtract the entry from that, we ended up with a $210 winner, folks. Already on the first trade of the day, today, you would have made your 4%, even with commissions. Just showing you that. Next trade came in at, number 2 was on a 233 tick chart. So let's go to that one. And we are going to scroll back in time to the time of 8:46. My times are all Chicago pit time. 8:46. And that would have been right here. Just a moment. And this would have been our retracement, again, a rather sloppy retracement. The reason why this one wasn't legal, two reasons. Well, actually one reason, the risk. If you look in the data box, the risk amount is 110. We don't fudge. We have discipline. Yes, I know you would have made money on the trade, but don't get into that woulda, coulda, shoulda stuff, because then you're not trading a true mechanical system. Let it go. That river runs by here every day. You'll get your fair share. Because right here, here's another setup. It was legal. It was within the prescribed distance from our indicator. It was oversold at the time that you got in the trade, just barely. And you would have entered with a risk of only $100, and you'd have gotten in one tick above the high. And that would have been here at 1107.7. Did you make it all the way up to 1108.7, $100? Boom, you did, and then you came right back down and scratched. That would have been a very quick $110 trade. And David, I disagree. You're saying it produces 4 to 5 bars per minute. If you understand the concept of tick charts, volatility varies throughout the day. I can sit there and watch a tick bar, do nothing for 5 and 10 minutes if there's low volatility. And sometimes it can be, yes, very fast. But I also have a tool that my traders use that lets you know exactly when to enter the trade. Just like I had a timer on the other chart for 1 minute to let you know when it's time to park your order. So here we are up 110 on top of the previous 210. And so we're still increasing our profits. The next trade, number 3, occurred on a 144, so we'll go back to that one. And that one occurred on a 144 at 11:58 Chicago pit time, so we'll scroll way over. And got to keep going. I'm just dragging it forward. I'll tell you what, I'll use page up. It's faster. I'm going to have to go back in time. What in the heck? Something is not working. Let me go back in time. Yeah, we're doing it right. I said 11:58, and that would have been right here. Let's move him over to the right. Now, we never did get to participate in this because why? It was an uptrend at the time on this chart. So that filtered it out. We couldn't have taken it into consideration. Along the way, we didn't get a legal pullback here. There weren't enough bars, wasn't close enough. After all that distance, we did get a setup, and that time is 11:58. The risk in the data box is $60. And we could have either scalped or scaled out, either way. And I'll show you that you would have entered a tick below the low at 1106.2. Whenever I quote a number or anything, go to the data box and you'll see the exact stuff. So 0.2, there's your entry right there. And here you would have gotten in, and would you have made it or not? Well, 1106.2, how about 1105.2? Right there. That was your target right there. We went through it. You made your 100 on the scale out. Or if you decided to just scalp, you'd have made 5 ticks on the scalp on each contract for a total of 10 ticks or 100. And then you would have come back if you scaled out and scratched. So that would have been another 110. So you got 110, 110, and 210. That's in your first 3 trades. In the 4th trade, we're going to go finally to the 1-minute chart. And how much time do I have left, folks? Alert me. Keep me posted. How much time? 12 minutes. Okay, I'm going to let this be the last one. I'm afraid we're going to run out of time here. On this isn't the last trade, but I'll give you the times and the profits on the last ones. This one occurred at 12:29 on a 1-minute chart. And 12:29 would have been right here. Again, what looks like pullbacks might have not been setups for various legal reasons. I only take legal trades. This had a $70 risk, and you could have used the same scale 100. You'd have entered a tick below the low at 1105 even, and it went all the way down to certainly more than $100, 1103.4, and came back and scratched. I'm going to give you the times for the other remaining ones. For trade number 5, it was a big winner. It was on a 144 tick. It set up at 106 Central Time, and you would have made $190 on that one. The final one, a setup on a 233 tick chart, was at 1:51 p.m. Central, and it made a total of $110. All 6 trades were winners. We made a total of $840 today on all legal setups. That's a 100% ratio of winners to losers, and the ROI was 16.8%. So let me try to move back to the presentation and wrap things up so I don't lose track of time here. And I'll try to take questions and answers here. Just a moment. I have to switch back and forth. Here we go. And let me make sure that I can see what you're seeing. Okay, good. I think it's finally showing up. We've just finished the sample trades. And folks, what you've been looking at is what I call synergistic trading that's based on using multiple time frames with matched strategies. It's a custom designed trade management exit strategy approach that allows you to adapt to the different kind of market conditions. Big strong trend, use a long-term strategy. Small weak trend, just use a scalp or something like that. I've got 4 exit strategies. They're all automated and they're all tailored for the various kinds of conditions. So in the trading system itself, you're getting a trend following system. I believe is the safest, most profitable approach, and it's built on top of tuned cycle-spaced multiple time frames that allow you to have that adaptive response and always keep that risk at or below $100 per contract traded. You saw the automation in the exit strategies. This gives you a fully mechanical, rules-based approach to trading. Everything has real tolerances, real precise signals, not close to or about or try this, try that. It's absolutely consistent. And if you want real consistency, we'll take a moment here and just emphasize the importance of discipline, because even the best system can't give you everything if you run that system into the ground because you don't have the discipline. Because if you've got consistency, you've got the holy grail. If you read Jack Schwager's Market Wizards books where he interviewed the best traders, you know discipline is the primary reason for success that they all quoted. If you're an engineer or a scientist, you know the importance of a feedback loop. Or as programmers say, garbage in, garbage out. I give you a special performance enhancement tool that is integrated into this course. It's used by a Navy, SEALs, Olympic athletes, fighter pilots, professional athletes of all kinds. It will help you perform well while under stress. So if you do all these things and choose TradeSafe, what are you going to get? You're going to get way more than just a true system. You know, there's systems out there that are valued $3, $4, $5, even $10,000. Even if I valued the TradeSafe system for a fraction of that, and I put in my personal coaching, which when people consult with me, I bill at $250 an hour. I give you over 300 hours of my personal coaching in the trading room and outside of the trading room. And I don't just say read the manual or watch the videos. I will train you up personally on a weekend webinar. And I give you, if you're using NinjaTrader, custom design workspace and charting templates. You're getting that automatic master trend indicator that shows you really accurately when you truly do have a trend. And the automation that shows you whether you've got all your tolerances satisfied when you get the pullback and the setup. Plus, once you're in the trade, all the automation you saw, that's there too. You're going to get a structured approach, just like in a classroom, where you go through button pushing, build a real track record to achieve statistical relevance, and I'll test that. I'll review your trading history personally, and then give you my blessing before you go into live trading. And while you're in the trading room, you get access bell to bell. And a lot of people charge $200 and $300 just to watch them trade. I'm here to coach you. You get to wear a headset and talk to me anytime, and I get to watch you trade. I can see your desktop and critique you in whether you're trading the system correctly. Nobody else does that. And I record and archive everything that I do in the morning coaching sessions. If you miss a session, you can go to the archives and see what you missed. Plus, I've got a lot of other valuable trading tools that are in these archives that you can see. Naturally, you get a manual. Naturally, you get a business plan to trade like a businessman or a businesswoman so that you can always achieve those financial goals. And of course, I want you to have feedback. Just like the autopilot on a jet, you're going to have to be able to have the feedback that keeps you on track. And I've got custom designed tools just for that purpose. I'm having to kind of rush a little bit. I don't want to run out of time, but trust me, there's much, much more information here than I'm able to get in. And you're going to get that very special, powerful tool that helps you forge diamond hard discipline. If I added all of this up, It's way more than $5,000 worth of value. If you really want to achieve true consistency, would you be willing to pay that? Of course you would. But you don't even have to pay half of that, because today I'm giving you a very special offer. It's going to be $19.95. And what I'm going to do is I'm going to try to post some information here. I don't know if that's going to show up or not. If you click on that, that would let you actually register once we're done here. But I'm going to encourage you to do something else first. Don't be impulsive about it. Actually, I want you to do the following. Well, first consider this. You can pay for this course and system and my coaching easily by the profits that you're going to make. But if you're a U.S. citizen, I've even made arrangements for you to get 0% interest financing over 6 months worth of time. But that's only for those here today or who are watching the replay. You're going to get the link to the video. You'll see that. And after this weekend, I'll follow up with my own email. Go to the daytradesafe.com site. Ask for your free coaching consultation. When you opt in, you're entitled to get that. You can go to next Thursday's open house. I have them every Thursday afternoon, normally at this time. And you can reach me. There's my phone number, area code 512-267-1492. But please email me, make your appointment, because then I will be with you as long as you wish to get all your questions answered. And I promise you, I will not twist your arm or give you sales pitches. I just want you to come away feeling that all your questions were answered. So there's the site, there is my email, and there is my phone number. So how much time do I have left? 4 minutes? Okay, I'm going to try to take some questions if I can. Let me scroll back and see. Boy, I'm going to have to scroll back a long ways away. There's a lot of questions. I'm going to do my best here. Okay, how do I know when to switch among the various entry time frames? That is taught in the course. It shows you which one. Even if they're setting up simultaneously, there are specific rules for that so that you don't end up with redundancy. And how many contracts can one trade during the morning session? Well, that has nothing to do with the TradeSafe system. We trade starting with 2 contracts, and the money management system I showed you earlier, when you build your account, lets you increase your size from 2 to 4 to 6 and so on. So if you go back and review that, you'll get that answer. How many total trades per day? I answered that before, but I'll say it again. Anywhere from 3 or 4 on the low end to as many as 18 or 24 on the high end. Let's see, what else? Do I have a course in a live trading room? Yes, Dan, I do on both of those counts. And by the way, we're near a very major correction. We traded this through the last 2 major crashes, and including the recession, and the system has never had a losing year or a losing month. And let's see, what else? I'm still scrolling. Stats on the students, Bruce wants to know. Well, ask yourself, Bruce, how do you force someone to show you how they're doing? Suppose they complete the course and go away. There's no way to do that except anecdotally. The ones that are currently in the course, I can always tell you how well they're doing, and virtually every single one is making money. But I've had over 2,000 students over 13 or 14 years. Some of them have stuck around. A lot of them have been very happy and campers and gone off and traded on their own, and I don't know how to reach them. Let's see, is it a trading outfit, a subscription-based? No, it is not a subscription-based. This is one-time fee. You get the system for life, you get all of the information, and you get 3 full months of my personal coaching in the trading room. And do I have any sort of satisfaction? Diane, you're getting all of my proprietary information and indicators for free. I tried to do that and I got ripped off. So once I have that out the door, there is no way to really offer a guarantee because you are the wild card. No disrespect, but the truth is that the system works. A trader can oftentimes not apply the rules consistently, and I have no way of verifying that, in all fairness. And let's see, I'm still scrolling, and I didn't lose anything in 2000 or 2008. Absolutely not. I had losing periods, but I didn't lose for the year. No. And let's see. Okay, and Nick wants to know how to performance record. Okay, Nick, there are 4 systems in one. It's got 4 different exit strategies, so there's no way to say I have a compiled exit strategy over a period of time, because maybe you took a scale out and another person did a scalp. So each one would have to stand alone. For 6 straight weeks last year during the springtime, for example, one of our scalping strategies had over 92% accuracy. But none of our exit strategies have ever done less than 58% over any period of time. You're going to end up, and I have to admit this is anecdotal because there's no way to give a performance record on this. You would probably be hitting in the roughly the middle 70 to high 70% accuracy rate. And Kumar wants to know, why would one lose in a crash when one is just scalping? Well, it is possible that you could, Kumar, be in a trade and blow up your account if you got massive slippage in a fast market. I mean, 2000. Okay, there it is. Folks, we've got 1 minute left, so I'm going to have to cut it short at this time. And I want to say thank you for being here today. Thank you to Yana for helping host this event. Do take advantage of getting in touch with me one more time. The email that I showed you, please get in touch that way. So I'm going to be quiet at this point and turn it over to Yana. Thank you, folks, for being here.